the best customers for us are ones that have
more individuals are adopting, but also companies that are thinking more about, okay, tokenization, stable coins, and how to operate in that market.
that data lives somewhere. You are able to, as the owner of the KYC information, you can permissionally share it with somebody.
You gave me the great segue to talk about Persona Connect.
Sign us up.
Yeah.
We've been asking you guys for a long time now.
Hey, I want to just share my credentials again, almost like if it was like your wallet on your phone that you just share, like in our KeyPass. So
There's not a good standard for sharing KYC. I think that's probably the next big revolution where
hi everyone, Ed here from Persona, and I'm excited to be back with Personally, our podcast from Persona. And don't worry about this intro, we're going to probably do it again soon. But I'm here with Brandon Ooi. Thank you so much, Brandon, for being here, for making the time. And I'm excited to hear more about Dinari, about your journey. So maybe as a starting point, I'd love to hear a little bit about, you coming into like from dorm room, like I think the classic Bay Area, building a company to where you are today. Can you share a little bit about your journey?
Sure. Yeah, it's a pleasure. Thank you for having me. I guess my first job out of college was actually at a company called Hot or Not.
Hot or Not? Oh, wow.
Yeah, which depending on how old you are, you know what that is. It's a Web 1.0 type like rating site, which is actually the thing that powered it was the dating side of it. And so I worked with Jim and James from Berkeley as kind of like an intern, but it was more of like a incubation for them. Like if you think of it like a Y Combinator, this is like pre all of that stuff. And they were always insistent on like, you guys should go and do your own thing. Don't work here anymore. So we started Crunchyroll, which is kind of like an anime subscription VOD. It actually started as like a website where we're like, hey, like upload your anime or whatever, like similar to kind of what YouTube was in the very beginning. And it, it just caught fire. Like it was an underserved market, and Japan was not very, interested in doing licensing outside of Japan. So we're like, we could do that for you. So I was there for, about 8 years, grew the company to, 200 some people, and then left to kind of do more startups. So
yeah, that's so great. And I mean, we feel like, as you said, like we're back then, we remember all of that, like Hot or Not, we remember Crunchyroll growing up on that. And then I guess from there, as you mentioned, like you kind of always wanted to be in this startup scene and go back into like, let's build again. What happened next? And then what led you into starting Dinari?
So I did a bunch of startups in between. People like to think like, oh, like Crunchyroll, like you did so well. But really, it's a lot of failures in there too. I worked at a company that was like an Airbnb type of thing, but for storage, not for like staying. And then I also worked at a company where we're trying to do, I guess like annotations for news articles, like peer-to-peer annotations. So you can think of like you go to like a New York Times or something, and then you highlight a section of text and be like, hey, this is really funny. And you can share that text with people. We thought that was really cool, and it was cool, but there's not a lot of money in like text news, so we couldn't really find a lot of like paying users. I worked at a couple other places. I landed at Stripe, doing like payment related things for enterprises, and that's kind of where I got that fintech, like big business type of, I guess, interest, working with like the Instacarts or the Ubers of the world, and like how do you solve like these like kind of like payment money flow problems at scale. And so I guess that's kind of where I got that mentality, and a lot of my kind of like experience there shaped how our approach at Dinari. So Dinari, I met Gabe, who's a friend of mine, and he was like, hey, we should do this tokenized stock for small companies, like, or, private shares, essentially, like cap table management.
When was that?
That was probably like 2021, 2022, something like that.
That's before it became like a buzzword where like everyone's been using.
Yeah. And it was like tokenizing, like private shares. And private shares are a very complicated beast. Like there's no standardization really. there's like, oh, we want like this, we can only have this number of people in the cap table, so you can't transfer it. We need to have the ability to do clawback, and there's a lot of like just special casing. And we ended up like working with customers, and they would ask for like a special thing, and then we have to write that as like a smart contract. Well, oh, there's this type of like transaction, we have to write that, and it just didn't really work out. Like there's a couple companies that are trying to do it today, and I'm like,
yeah.
It sucks. Like you have to go to the issuer and you have to work with them directly.
Yeah.
So that's when we pivoted to doing public shares. And like the question when we were doing it, and this was before tokenized securities were a thing, they're like, is that even legal? Right? And you know, we did a bunch of like research, we hired lawyers, and they're like, well, it doesn't seem illegal. So we're like, okay, like that's enough for us.
That's the one we want.
Yeah, and like, but from the very beginning, like our approach was like assuming that tokenized securities becomes a thing, like how do we fit into the regulatory landscape? And part of that is, you know, trying to guess where Congress and where like U.S. securities laws are going to be, or where the EU laws are going to be for securities. We already knew that they have been working on things for like stablecoin, and like the kind of next logical step after stablecoin is tokenized securities.
Yeah.
So we've actually been working on it for more than a couple of years now, building like the framework for how do we do this in a legal way. And Persona actually played a big part of that, because we wanted to guess where we thought the regulation would be. And part of that, or the biggest part of that, is like identity verification.
Yeah.
How do you prevent bad actors from moving money, which is the essential, like the reason that all the laws are written the way that they are is mostly around how do we prevent people from funding terrorist activities? How do we prevent people from moving money from dirty places to clean places?
Yeah.
And so we've built, I mean, I would say the majority of what we've built is to that goal.
Perfect. I love that. And you mentioned like two very interesting things. One, you mentioned obviously tokenization, then moving from private markets into like, I believe you're doing like tokenization into ETFs, regular stocks, bonds and all, which is like an insane growth, but also change. And like, okay, we're seeing this in different ways, but you operate in like many countries. I don't know if it's like 80 or something, like it's a pretty high number of countries you operate in, and being compliant. I think as you mentioned, how you're like understanding this money transfers between countries can get complex. I think it's more like even like regulatory or like compliance related complicated than necessarily just like technically hard. So I wonder like how is that like, you mentioned Persona being a part of it, but how you're actually thinking about it, from not only the technical perspective, but also like being compliant, making sure, like as you said, like we're preventing like, bad actors, but that's like multi-country, it's not like a US only thing.
Yeah. So I think there's a couple like approaches that that people have tried for this. Our approach is actually one where we don't want to solve that side of it, because we're not on the ground in Hong Kong or Singapore or in the EU. We're not that big of a company.
Yeah.
And there are plenty of companies there that specialize in that. And so Dinari, taking some inspiration from Stripe, is a B2B business primarily. So we work with partners around the world, ones that that know the land, know the laws, know their customers, and are the best people to serve their customers. So what we try to do is we try to find partners in these places that may have the licenses required to do it. The reality is that most countries don't have a good, comprehensive tokenized securities laws in place. And so a lot of it is kind of like approximations, and that the US is included in that. Like there's not clear kind of legislation around what is allowed and what is not. And so we try to work in kind of the we work in the gray area where we think we know what these countries are going to do, and sometimes some licenses will cover it. So if it's like a digital assets license or like a VASP type of license, we'll work with the companies there and be like, yeah, we think that this is like what was needed for us to trade tokenized securities. And then we work with them. We work with their customers to figure out what is the right KYC to collect. Sometimes we collect it. Sometimes they collect it. And it's really all about trying to find the right partners in these areas, because like the reality is that we're never going to know, and we're never going to have all the requisite licenses. We would much rather find good partners and help bring tokenized securities to them.
Right. And you mentioned like the work with B2B. That's a very interesting approach. So you would essentially look at like, I don't know, exchanges or other, I don't know, which kind of companies would be this businesses? Kind of imagine there's a point where it becomes like almost like a B2B2C.
Yes.
So they kind of help you get to that point.
Yes, it's mostly B2B2C. It's actually in a couple cases it's B2B to B2C. But like the best customers for us are ones that have retail customers. So they could be like a centralized exchange. Right. They could be like a remittance company. They could even be like wallets, where they want, we just want people to be able to buy tokenized securities in their wallet app, or whatever. Or it could be like a investment advisor. There's all kinds of customers, and a couple of them are again like B2B to B2C. Like they're like, oh, we actually serve businesses who serve customers, and so you can think of it as like a not like a centralized exchange who has retail customers, but a company that operates centralized exchanges for companies that have customers, right? So in those scenarios, it can be a little bit kind of like confusing, but the end goal is still the same. Like, who are the kind of like end users? What are the requisite kind of like licenses that you think you may need? And hopefully in the next year or two, we'll see more comprehensive coverage of regulation coming to the rest of the world. And I do think that does start in the US. Because like truthfully, a lot of countries, they just kind of figure out what the US is doing, and like they're like, yeah, they've thought of it. Let's just model our laws after theirs. So I'm hopeful that we will see some clarity from the SEC, but obviously we work with the SEC pretty closely. So we are again like hopeful that they're going to form it in a way that improves the market and not just smack it down.
And that's a great segue into like kind of next question around like future of finance. If we're to think about TradFi, a lot of banks are thinking tokenization now. We heard BlackRock now tokenizing ETF, all of that like happening. How do you see that future? Where do you see Dinari playing like a role in all of that that's happening? Maybe in between like the Web3 and Web2, is there like an opportunity as well?
Yeah, I mean, our goal is to be able to bring the benefits of tokenization to regular securities. There's a lot of restrictions around securities that I think don't lend well to what people expect today. And like it can be as simple as like, hey, I want to buy some NVIDIA. Oh, it's Saturday, or oh, it's like it's past 1 p.m. on Pacific time, and then like they can't do it anymore, and that doesn't make a lot of sense as to why. Or even things like, like, hey, I want to see what my portfolio is. Oh, but Charles Schwab is down. Like I can't really tell. To even things like being able to support, like lending, for example, right? If you wanted to borrow, money with using your stock as collateral, most of the places are going to be like, well, do you have like $2 million? Because we don't really want to interact with people unless you have like enough that we would be willing to do this. Whereas, in on the blockchain, like you can borrow $10, and so like, I think there's a lot of benefit from the the security and the automation that the blockchain provides like natively. And what we are trying to do is act as kind of like that translational layer between the benefits of blockchain and the benefits of securities and stock, because the reality is that the stock market is the second largest asset class on the planet, and it includes, like ownership in companies that are growing. And if you want to, grow your money, you have to, like, stocks have to be a part of your like investment strategy.
Yeah.
But most of the people in the world don't have access to it.
Yeah.
Like, you need to be in the US or US adjacent, meaning you're in a country that has a bank that has a US branch. And like that ends up being pretty difficult, especially in South America, in Africa. But really it's the access is difficult all around the world. And so, the blockchain kind of is that like democratizing layer that lets anybody, invest in anything.
Yeah, you mentioned like democratization, and I think that's the word, because I lived in Europe for 15 years, and one of the challenges was exactly that, like access to certain stocks and ETFs, because there's a limitation of how much you can or what you can buy from the EU. So I think to your point, you want given access to multiple countries to be able to transact, and then the fraction of a stock also makes it so like someone who is like maybe on a low income want to get started, there's an opportunity for that person to get started individually. Do you see, I don't know if it's too topic, but like a future where even stock exchanges becomes irrelevant because you can just buy stocks anywhere through tokenized?
So no, I mean, like, I think exchanges play a pretty critical role in how stocks are traded. And part of that is regulatory. So like the SEC, for example, if you want to be able to trade stocks as like a business, you have to provide something what's called best execution, or like the best pricing. And while it's kind of like easy to say, oh, like best execution, most crypto exchanges don't do that, right? They provide best execution maybe on their exchange, but like not across like many exchanges.
Yeah.
So, but in the US, that's not true. There's this thing that you can say, like, I can trade on, like, for example, the NASDAQ or maybe one of these dark pools, but there can be a guarantee. They'll be like, well, we'll look at the other exchanges, and if one of the other exchanges has a better price, we'll trade there and send it to you. That doesn't exist really in crypto. And I don't see that changing in the future for securities. And so you're still wanting to work with these exchanges, and they've already solved this problem decades ago. Being able to, like, provide best execution across exchanges. So really our goal has been to not reinvent the wheel, but merely connect these two together. So like when you buy NVIDIA token from us, we actually go to the exchanges and we provide best execution by using these exchanges. So like the NASDAQ, the NYSE, or Blue Ocean, they're providing the mechanism that we're using for best execution.
Makes sense. I love that. Like, I don't know, the word to me feels like we're getting much more mature as the space starts to like merge. I think to your point, there's a lot of needs still from the, let's say, the web to the traditional system because of regulations, compliance, and all of that. And then there's like maybe a more like future approach, or like a future proof approach on like tokenized using blockchain, and like trying to merge that. I think we're getting to that point where it's becoming like a more of a natural language for people. They're like not scared of being like, oh, this feels like it's a punk trying to get me into the blockchain world. It's getting more like normalized, I feel. Do you get that feeling as well?
Yeah, I mean, I think well, we always hear about like these huge hacks of bridges or whatever. So I think there is still a trust issue, and it's probably one of the biggest challenges, because if you can't go to like the Fidelities of the world and say like, hey, like, use us, but like somebody adjacent got hacked for $800 million, something like that. So it is a challenge, but there is this benefit of real world assets, because the challenge for like things like Bitcoin or Ethereum, right, is that there's not something that's like behind it. These are all virtual assets that have their place, but it's not a real world asset, which is what we primarily operate with. So our tokens, there is ownership behind them, and some coming with that ownership is a number of restrictions. But those restrictions are founded in, I would say, hard-earned lessons that the securities industry has gone through, over and over again. And so rather than kind of trying to ignore all of that and move directly into the tokenized world, which I think a lot of, people have done, we take a much more measured approach and try to take the learnings and take the lessons and use the facilities that they have built to protect your end users, right? And that's why we work, primarily with high quality partners, centralized exchanges with strong AML policies that are, I think in the same vein, because we need to build trust that like this is a place where you can invest real money, right? Like it's great that crypto is, I think, something like $4 trillion or something like that, right? But the equities market is 100 trillion. And a lot of that is not going to move unless you provide that like trustworthy medium to move it to.
And that's I love that you mentioned this because there's the, let's say, the traditional, the KYC, KYB trust of like, hey, I'm making sure I'm vetting this company I'm interacting with, or this user I'm interacting with, the individual. But there is also trusting like to your point, like in the system, as like, how this is performing. Are we creating something that could cause risk or could cause lack of transparency for you? And a lot of what has been built, maybe like for a long time throughout the Web3, is around like authenticity, like, anonymous approaches of like, we're not like, there's zero knowledge proof. There's like, not like being, creating like an identity. It's anonymized. How do you see that? Like, do you feel there's still like some friction there? Or like, is there like a better adoption? Like, okay, this has to happen. We have to KYC folks. We have to make this more transparent. People need to see what's going on.
So the assets that are not backed by like a real world asset, so like let's say Bitcoin, I think it's difficult to not have permissionless trading, because like permission trading, which is kind of closer to what we do with securities, it is a more difficult product to work with, right? Like you've got like, KYC limitations. We do things like wallet intelligence, looking for, like what is the actual source of funds and stuff like that. But companies like NVIDIA exist within the framework of a government, whereas Bitcoin does not. And so when your existence is dependent on the government, like the U.S. government, writing the laws, protecting the company, making sure that they're operating fairly, that's why the restrictions for the government apply to that asset. And I think that that trend is going to continue. And even the current head of the SEC, Atkins, has said that tokenized securities are still securities. And I wouldn't understand why you would think that they're not securities. And because securities, they exist within the framework of a government, you have to abide by the laws and rules of that government. So I don't think that that's going to change ever. I think there can just be more clarity to allow companies like us to build it in a way that the government is happy with, and we think that we actually work with them to a great deal to figure out what is that approach. Because it's not going to be the same as the current stock, but I don't think it's going to be significantly different where it matters. Like needing to know the people, needing to know where the money is going. They don't want securities to be an avenue for like terrorist funding or for money laundering. And that makes a lot of sense. And that, again, all of those operate within the context of governments.
Yeah, love that. I want to go back to a little bit on how Dinari is operating, because you have this tokenization on demand. I believe you call it D shares. What does that look like? How is that different from the regular tokenization? Like, is this based on a specific technology or how you built this? For whatever reason, I'd love to hear more, like understand more of that.
So tokenization on demand is really, it's a compatibility layer with the current market. So the way that it works for us is when you come with us, with stablecoin, and let's say you've already KYC'd and you place an order, we actually go and place that order on the primary markets. And so the token doesn't exist until we have the asset in hand. And that's how we guarantee that the backing asset, one, we can get the best price at that very moment, and that the token doesn't exist without the backing asset. And that's like a very important piece of it, because like outside the US, the token can be the security. Whereas inside the US, the token is kind of the ledger, but at the end of the day, it's the same thing where it is 100% guaranteed to be backed by the asset. So that's what we mean by tokenization on demand. The issues of not doing it that way, like if you were to mint it and then go and purchase the stock, or you're purchasing the stock in a tranche or whatever, you run this, one, you kind of have some balance sheet risk, and two, like what does that token even represent? Like, is the asset real or not? What is the price of that asset? Does it have any bearing as to what the market is saying that asset is, right? Yeah. So tokenization on demand is really we are players in the traditional financial market, but we provide this tokenization layer to kind of join Web3 with the traditional markets.
Love that. Kind of like leading into fourth part of this talk. We're talking about a lot of the maturity of the market, how more individuals are adopting, but also companies that are thinking more about tokenization, stable coins, and how to operate in that market. Do you see any world in how identity verification changes as well to kind of fit in in what's happening now, or it's going to continue to be, I think, to your other points, same thing, it's traditional Gov ID, selfie kind of thing. Is there a future of that too that you see?
If you're looking for ideas as to how to evolve your product, I think we have a lot of ideas. One thing that I don't believe that will change. If the US is going to require IDs for you to trade stock, then why wouldn't Singapore? Why wouldn't the EU? And in many cases, their securities laws are just as strong as what we have here. Yeah. There's a lot of operational and UX type of problems with the current way. Like if you KYC with a company like a bank or something, and then you want to open up a brokerage account, many times you have to KYC again. Yeah. And it's difficult for two different entities to share KYC. And we solve it via APIs or working directly with the identity verification vendor. There's not a good standard for sharing KYC. I think that's probably the next big revolution where, and a number of companies have tried this, but there's not a clear standard yet where you can KYC one time, that data lives somewhere, and then you are able to, as the owner of the KYC information, you can permissionally share it with somebody. Yeah. And the ideal flow would be an OAuth type of a thing, where hey, I'm linking to myself to Dinari, get my identity from this already verified entity on Persona or something. That doesn't exist yet, but it certainly could if we could figure out the right mechanism to securely do that, and where does the data live, and what is the interface, and what is the standard for doing that. I do think that is a new frontier for making all this easier. but there are, there's, like base identity, and there's a few different players who are trying to figure out what that standard looks like.
Yeah. Brandon, I didn't pay you for this, but you gave me the great segue to talk about Persona Connect. But that's so we literally launched this product that you're mentioning. We're working with CoinFlow. I believe you're all partnered with CoinFlow. Yeah. So CoinFlow is using Persona Connect, which is exactly to what you mentioned. Like you've been KYC'd once, say with CoinFlow, you just shared that identity with whatever other provider. So say they could share with Dinari, so they don't need to be re-verified, and that's based on the user consent. So they can say like, hey, I want to just share my credentials again, almost like if it was like your, I don't know, wallet on your phone that you just share, like in our KeyPass something. So we're using that. We're excited to like launch with more companies, and you definitely should be
sign us up.
Yeah,
because we've been asking you guys for a long time now.
Yeah. So I love that. It wasn't planned, but since as you were mentioning, I was like, wait, he's describing Persona Connect. So yeah, it's live, and I'm super happy to share with you.
Yeah.
And
I think I got asked about that for Persona just today. So
wow. Okay.
I'd be happy to offer them an actual solution to that.
Amazing. Love that. And I guess like as we wrap, kind of wanted to hear like from you, like personally, I know you've like come from anime to fintech now. You mentioned something that was really interesting. I think there's something about the audience. There's a little crossover on like being tech forward, like being like maybe tech first, and thinking like NFTs was a big thing for anime and all of these folks. Where do you see like for yourself or for Dinari, like what's maybe the next couple of years? Do you kind of want to continue on that space? Do you see something interesting? There's any new intersection that you're maybe considering?
As difficult as it is to operate in like a highly regulated space, it's actually been like super eye-opening to see how the problems, like the crypto space has many hard-earned lessons that if you read the history of like the securities industry, like a lot of this, like they've learned this a long time ago.
Yeah.
And so, like I think taking some of the learning, so there's still like a ton to learn for crypto that I think the securities industry does well. Things like exchanges and like the SIP, and like being able to like get like best data and best execution. Like I think the crypto industry has a lot to learn from that. But I do think that the securities industry has a lot to learn from crypto. A lot of that maybe is just due to the fact that crypto uses smart contracts, and there's a lot of like automation that you can build. There's a lot of like trust that used to be in the hands of banks and exchanges that maybe you don't have to trust anybody anymore, right? And so like that space is actually huge. And I'm super excited to work on both sides because there's a lot of stuff that I think the securities industry could learn from crypto.
Yeah.
Things like peer-to-peer lending, or like, like better solutions to things like options, or like or like more interesting financial instruments that you can use with collateral, like stock as collateral. And also in the other way, like how do you bring trust that the securities industry has done an amazing job?
Yeah.
How do you bring that type of trust to crypto, right? And that is it's not in the form of smart contracts, as I think a lot of people think. It's actually in the form of like, who are the players, and like what are the regulated like what are the regulations that you follow, and how does this work internationally? Like, like we've brought our tokens to the EU under like the MiFID II license, and like that experiment has gone really well.
Yeah.
And so like that's a lot of that is a bi-directional type of thing. Like how do we bring the best parts of the securities industries to crypto?
Yeah.
And how do you do and vice versa?
Yeah.
Right.
Yeah. Love that. I have like a similar in a different way challenge with like community, like the traditional foundational community with like technology. And I think that's like, I love that. Like when you intersect two challenges and you can learn from each other. That's great. So where can, if there are founders or companies that are like interested in like learning more about Dinari, is there like a website or link you can share, like, or even like your profile for people to follow you if there's any updates you'd like to share?
Sure. Yeah. I mean, you can come to dinari.com. read a little bit about our company. It's especially targeting kind of like businesses, like anybody who has customers who have money that they want to invest.
Yeah.
We are happy to, sit down and have a conversation. How can we help your business grow? We are a 100% partner-driven business, and so we want to provide a way for everybody to make money and everybody to offer like really cool products to their customers.
That's awesome. Yeah, perfect. Thank you so much. Appreciate the time, Brandon.
Thank you for having me.
Yeah, looking forward to seeing more from Dinari. Thank you. Hope you liked it. Feel free to share with your friends, share with other companies, folks from your business. And if you're interested in talking to us, if you're interested in learning more, or even joining the podcast, who knows, you can contact us. You can leave me a message. I'll be glad to talk to you. See you soon.